Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, June 24th, 2010. Well, folks, here we go again. The market early in the day selling off much like yesterday, and then again throughout the rest of the day so far, the markets have slowly inched higher. And you can see again, the market pattern is much reminiscent of yesterday. If you scan to yesterday right here, early in the day, sharp selling, but then the rest of the day, the markets kind of went sideways. Once we got the Fed word out yesterday afternoon, the markets chopped up, they chopped back down, and then ultimately ended a little bit higher from that level that, again, they rallied off of in that 3 o'clock time frame. Now, again, today we saw the selling continue. Gap down in the markets, sharp sell, bounce, sharp sell again, all the way down to the 107.50 level. Now, the 107.50 level, for those of you that are Research Center members, and again, that's part of the In the Money Stocks portfolio of what we offer our individual clients and so forth. The Research Center, again, you got that daily as a key level right here, and you can see how perfectly that hit. And these levels, again, have been called out for the last multiple weeks, if not months, in the markets. Again, expecting that V pattern pullback into that 107.50 level. It went exactly there today. So right off of that, that was your buying opportunity. We talked about a couple key plays in the intraday stock chat and one on the hot charts and alerts sent out as a long-term or short-term swing trade over the next few days. We should see some good profits out of that. Now, going back to the intraday, I don't want to spend too much time on the daily. Again, that's for premium members in the nightly video. But bottom line is this. The markets, again, they're slowly coming off. We just hit the 50 moving average and a master level right here. The 108.60 to 108.50 level amazingly held up again today in the afternoon session. This morning, we broke through it. Now, why was this level so key? Well, take a look at this. Yesterday, this was the low pivot, but yesterday we called this out as a major support level for a certain reason. I just didn't pick this level arbitrarily out of the blue. There was a specific reason why 108.50 to 108.60 was key. And take a look and follow this trend line, guys. I want you to follow it as we scan back. Scan, all the way back. All of a sudden, we come back into the 11th of June, and we have a pivot low. So right away, that's the reason why. Now, it doesn't end there, and this is the amazing thing about trend line analysis. If you go back to the 10th, pivot high. And then if you go back even further, folks, check this out. This is really cool. Gap down low before you had a pivot up on the 4th of June. So, I mean, I could go back further and further and show you how key these levels are, but discovering these levels is literally the difference in my mind between being a good, profitable trader in this market and being a trader that loses money. I mean, that's what it comes down to, bottom line. So, in any case, that's a really cool little fact. And again, as we scan back into current time, you can see, again, today we broke through it, fell back down. We confirmed below it. For those of you in the Research Center and the intraday stock chat that watch this video, note how you confirmed below this breakdown point. Closed below, confirmed below. Therefore, this line would be a short on the way back up. So when you bounce back off this level right here, that's your shorting opportunity because it retraced back into a confirmed breakdown point. All right, so there's your short again, 108.50 to 108.55 right there. The market rolls over. It goes right to this key 107.50 level. That, again, would be a buying opportunity because it's labeled on the daily chart in our nightly videos as a master level. That's your buying opportunity in this market. And, again, at that point, believe it or not, I'm okay with a couple small swing trades. Nothing crazy. You don't want to overexpose yourself in this type of volatile market. But in the short term, obviously, it's working out very, very well. The market inching back up here a little bit, then pulling back, then inching up again, and again, here coming up, and finally hitting the same level that we've pulled back off of the confirmed resistance. Now, confirmed resistance should be, again, resistance as well. Plus, you have the 50 moving average sloping down to exemplify or continue to hammer that level as a key level of resistance in the market. So, sure enough, what happens off of this, that would be your shorting opportunity. The market pulls right back. Where does it go? Right to a trend line right here. By the way, this middle ground trend line, look at this middle point right here. And then right here again, and now you have some support. If you take this out, you're going to go hit the 20, and then ultimately this pivot, and then the low pivot down here. If you take that out in the afternoon session, you're going to go all the way down to the lows of the day. So those are the key things that I want you to be paying attention to at this point in time. If we get above the 50, believe it or not, if we get above the 50, you'll have a little minor resistance at the highs of the day right here. And this is essentially gap window as well. But then, if you get through that, you're going to gap fill and possibly up to a positive day. Now, I don't know if you're going to get there, to be honest. There's a lot of negatives out in this market right now. We discussed them yesterday, that home builder number that came out. We had more kind of negativity today. There's just a lot of negative economic news showing more and more signs of a possibility of seeing a double-dip recession, and it could even be worse. I mean, when you have new home sales, the worst ever of all time, down 33%, that's bad. I mean, that's bad. There's no doubt about it. Now, what's been carrying this market off the lows? I mean, if things are so bad, why are the markets not at the lows, or why aren't they making new lows? Well, part of it was the master level, the 107.50 level. But in all fairness, Goldman Sachs has to get some of the credit here. Goldman Sachs, the low of the day right here, look at all these green candles, up. Now it's finally getting a little bit of a pullback, but that's a nice move on Goldman Sachs to the upside. It is positive on an otherwise pretty ugly day. And just to give you guys a sense here, I want to quickly let you know where this market stands. Right now, the Dow is down the downside 71 points, NASDAQ down 16, S&P down about 9.5. Now, again, it's not a huge loss, but we were down much more, except we hit the master level of 107.50 on the SPY. Now, JP Morgan, another one. Now, JP Morgan actually got some really ugly selling early on in the day, had a huge bounce, a nice retrace, and then has inched off the lows. So it's not as good as Goldman Sachs. JP Morgan's still down on the day, but it is showing a little bit of signs of strength off the lows pretty significantly here from a low of 37.42. It's over 38. It's at 38.17, which is about a 60, 70, 75 cent gain off the lows of the day. That's a pretty powerful gain off the lows of the day at this point in time, folks. All right. Now, other stocks of interest, Chevron, obviously Chevron, again, getting hit a little bit. This is a key market mover, down about $1 today on the day. It is trying to make a little bit of a bottom here, but overall, you still have to be a little cautious there. ExxonMobil, and again, talking about Exxon here, a little bit of a pullback, getting a small bounce now as well. If we go back to the spiders, folks, again, I just talked about this little bit of support line right here on the SPY. Look at the little bounce you're getting right off of that. Now, technically speaking, we could be looking at an in spirit of bullish pattern here, as long as you don't take out the 20 moving average. If you take out the 20 moving average on the downside, that in my mind would negate this in spirit of bullish pattern, and again, therefore, then you go lower. But right now, it is intact, and you can see we're starting to gain a little bit here, starting to turn back higher. We'll see again if it continues up. All right. Now, other than that, folks, that's really the leading stocks there that I wanted to discuss. There's a couple other keys. Apple computers we should probably look at. Apple's actually having a good day today, up 50 cents. Apple, though, has kind of stalled out and pulled back the last few days. Still very much near the 52-week highs, only about really about $8 off the 52-week highs that were hit all the way up here and thereabouts. So in any case, folks, that's where the market stands right here. Join the Research Center. You need these swing trade alerts to make money in this market. The key levels discussed in the nightly video are second to none. Pro Trader Watch List has been spot on as we take a compilation of all of our traders and take the most used or most noted tickers and put them on that Pro Trader with the bullish or bearish sentiment, depending on what they're looking to do with that position. And again, we'll continue to discuss and update you. All the access, all the key stuff in this market is available in that Research Center. If you want intraday analysis, constant live feeds, go join the chat room. Talk to you soon, folks.